What's your view on what we should be expecting for the trading day ahead?
Well, I think at the moment all eyes are on the fixed income market, seeing that the Kenyan public infrastructure bond offer bond has been floated on the automated trading system. And so most of the investors are looking there to see whether the retail investor is going to react and what sort of volumes we're going to get. Of course, we're also looking at whether the central bank is going to put the bonds, the fixed income and treasury bonds on that, the automated trading system, seeing that they're already connected. So I think most of the attention is on that side. On the part of stocks, we're still seeing a quiet market. Although third quarter results are still coming in, I think the local investor is still a bit reserved about getting into the equities market so far.
Well, certainly a lot of news being generated around the agricultural space. I mean, just this week we heard that government is to spend 300 million shillings marketing local tea in the international market. But we've seen the January to September output down 12% from a year earlier over the last 9 months. So what's your view on the ability of the sector to actually cater to the demand that's being instigated right now?
Well, I think what has happened is the drought has really hit the sector. So the output was really, the low output was really as a result of the lack of rains and the lack of conducive weather. The other thing is that this sector has seen mixed results, seeing that the price of tea has gone really high and they've made quite a taking, although with lower yields. I believe that the demand can be met, given that Kenya has the ability to actually increase production in a very short period. We also have the farms in place. We already have, it's not a matter of planting new plants. I think they have the ability. It's just a matter of taking advantage of the current rains and being prepared to increase output in that the infrastructure is already on the ground.
For now, though, I mean, we still have most tea companies and agricultural counters trading at very low PEs. If we look at tea companies specifically, I mean, Indian tea companies trade at PEs of no less than 18, while 2 to 5 is the trend in Kenya. Would you be buying into any of these tea players right now?
Well, locally, there's a lot of adverse feelings towards the agricultural sector, seeing that the agricultural sector has always performed very badly on the stock market. I think that is one of the reasons that investors usually shy off from the agricultural sector. The fact that our agricultural sector has very high volatility and a lot of uncertainty related to these stocks is one of the reasons. I think once we have in place a way of ensuring that there is more certainty as to the direction and the way these companies are going to perform, then investors will start to show more interest in these stocks. However, at the moment, the reason is really because most people find them to be very uncertain and they feel that there is too much risk in going into the agricultural sector, since they are normally governed by weather patterns and there is too much uncertainty.
Samuel, I came across a very interesting proposition yesterday in an article suggesting that some of these companies need to consider paying aggressive dividends to actually reignite interest and narrow the valuation gap. What's your view on that suggestion?
Well, yes, that would be a good idea, but the thing is their income streams are also very uncertain. So if they were to pay aggressive dividends, then it would mean they would either have to make sure they had adequate reserves to fund that sort of aggressive dividend payments, or they would have to have some sort of way of ensuring that they have the markets to sustain the sort of earnings they would need for that. What I think is that the commodities markets need to be deepened. We need to look closer into the commodities markets, deepen them, find a way of ensuring, having forward contracts, futures contracts on the commodities that would ensure that these companies have ready markets and have sure markets going into the future, which would then give them a way of being able to predict what sort of earnings they would make, and also to go into such a dividend-paying program.
Samuel, just very quickly to end off with, we've had government step in to assist the sector, and another measure that has been taken is government's reduced prices of fertilizer so that players could diversify their agricultural activities. What kind of impact do you see this having on Athi River Mining's fertilizer component and fertilizer arm?
Well, we import a lot of our fertilizer. I think the government, though the government has been working towards subsidizing this, my take would be that although it will have a good impact in the short term, I think the government would need to have a longer term program where we do manufacture our fertilizer locally and also try to get ways of having cheaper sources of fertilizer internally rather than relying on imports. And this way we can have a proper pricing model for fertilizer.